This week was a short trading week and we actually got stopped out. But instead of us spiraling out of control, we got back to these charts. We found great setups in COIN as well as in AMZN. That's the difference between emotional traders versus disciplined traders. Let us talk about the stop out. We entered into a position according to our trading plan. However, the price action invalidated the setup. Therefore, we exited. A stop out is not a failure. It's simply protection. It just means that your risk management worked. That's all. The thing is, traders don't lose based off of bad analysis. They lose because they're unwilling to take small losses. Here's what most traders may do after they get stopped out of a trade. They may revenge trade. They may size up based off of emotions, hesitate based on the next setup, or even quit for the week. All those decisions are based off of their ego and not necessarily based off of structure. Disciplined traders, now we simply reset. We look for high probability, high quality setups. And this is what led us to AMZN as well as Coinbase. Let's get to these charts. AMZN, this particular setup, it will look different from the prior setups that I've shown over the course of the Finesse Fridays weeks. In particular, this one was falling down, as we could see, the downtrend, etc. And then it looked like it started to form a nice base. I provided this particular swing Tuesday after the market closed. I went back to the drawing board, did a few scan, and I love the way AMZN based. This is Tuesday's candle, and then our entry bar happened to be here, Wednesday. Now I'll be able to draw the trend line for you all based off of the formation, and you'll be able to see it is in currently right now an uptrend. The options, I always stress the option contracts because that's how we make the bang for our buck, not necessarily buying the underlying. This stock is priced around 200, as you can see. Thinking about 100 shares times $200 per share, it can get quite expensive. The bang for your buck is all in the option contracts. AMZN with the bar, today's movement alone, options move between 200% to 260% depending on your strike price, especially if you have this week's expirations. If you have long dated expiration, let's say the next month, 2 months out, of course, those percentage returns will vary. However, all option contracts are currently up because of the upswing. AMZN, great movement, great price action. The next one I'll get into is Coinbase. Coinbase, very similar to the AMZN chart. It's all about the bottom information. As you see, as I zoom further out, I will stretch the chart so we can see the full picture. And this is definitely falling kind of off of a cliff. Similar bottom basing in regards to the structure. Coinbase, I'll give props to one of our members within our swing trading community. They actually posted the chart the same time as I went through the scanning process, and I'm like, I'll drop this in the room. I'm reading the analysis some members provided based off of the setups they found, and this was exactly it. I'm like, excellent. It triggered me in because my buy price was between 167 and 168, and we can see the movement. It moved and how high it went, 175.55. $7.50, almost $8 per share return on the shares. Option contracts, great movement as well. Let's get our trend line out from his candle and extend up. We just want to follow trends. That's all we're doing is following trends. I actually want you to see the ticker we got stopped out on. We got stopped out on QRVO. Our direction in which we were headed was also a bullish formation setup. We did get executed on the Tuesday. Keep in mind, Monday was a holiday. Our price was executed on Tuesday. However, we did get stopped out. Stop outs are protection. They're not necessarily bad. It just shows, once again, your risk money management works. This is what allows us to stay in the game. Get stopped out, we reset, we're able to find great setups in COIN to more than recoup that loss, as well as Amazon, more as a bonus, couldn't ignore. And we have other trades in progress that's still trending, moving higher, etc. And you can go back to the past trades that we still have on the list. There's a concept that I would like you to understand when it comes to old money in trading versus new money in trading. Old money is simply managing old positions, and new money is being able to find fresh opportunities in the market. Both of these concepts matter. New money requires confidence, and confidence is necessary, especially after losses. If a small stop shakes you up, you'll miss the next big win for sure. You have to make sure your headspace is always in the correct mind frame. I want you to understand the lesson for this week is rather simple, is that losses are a part of the process. We are trading in probabilities. If you cannot handle small losses, you will never be able to stick around long enough for the big wins. If you are struggling with your confidence every time you get stopped out, you start hesitating, doubting yourself, thinking you need more strategies. It's not that. You need structure and a solid framework. It's going down this weekend. We are hosting our 2-day live intensive, Sunday the 22nd and Monday the 23rd. That link to join us will be in the description. The question, once again for this week, did we finesse the markets? Yes, we did, because we remained confident and we found high probability trade setups. We didn't revenge trade, we respected our stop, and that's exactly how you take control and finesse the markets. Have a great weekend. Until next time.